Good afternoon, everyone. Thanks for joining us. We have our very first webinar with David Austin, CEO of Colonial Coal. I know many of you are shareholders and know the story well, but there's a bunch of new people on the call as well. So we will do a run through of the whole story, and then we'll have a Q&A section at the end. As always, this presentation contains forward-looking statements. If you'd like to know more about those, you can check them out on the company's presentation in the disclosure section. With me today, I have my colleague Magda, who's going to help with some of the Q&A. And of course, David Austin, CEO of Colonial Coal. Hi, David.
Hi.
Thanks for joining us today.
My pleasure.
So yeah, really excited to hear the story. Maybe you can start with a little bit of background on yourself.
Oh, okay. I got into coal business a good few years ago. I made a partnership agreement with two gentlemen, Dave Fawcett and Kevin James. They were both had a background in coal. I had no background in really anything. They needed some help with, let's say, money. I helped them raise the money and we acquired the properties. We then went public. And then over the next 10 years, we took it from drill program, work programs, all the way up. And 10 years later, we sold it for $3.3 billion. At the same time I was doing that, I also had another company called NEMI, Northern Energy and Mining. And we basically replicated everything that was being in Western. We did the same thing with NEMI to a lesser degree. And we sold that within literally days of each other. Both companies got acquired. We sold that to Anglo American. We netted somewhere slightly over 425, 450 million. I thought that was the end of my interest in coal. It turns out a very short while after that happened, the assets which we now have in Colonial Coal became available, and it turns out I was back in the coal business again. Yeah, that's basically boring enough. What we're showing here is basically where our property lies in regards to in British Columbia. The biggest challenge with coal is not necessarily finding it. We seem to have been relatively lucky at finding it, but if you haven't got the infrastructure to get it out, because it's a transportation issue, and this whole area that which we show and we highlighted over on the right hand side, the rail and everything else was built with taxpayers' dollars. If you grew up around British Columbia, you would have seen that there was a shares issued called BRIC, BC Resources, and those shares were issued to give back people in British Columbia value for the money that they built in the port, which is Prince Rupert, and then the rail bringing it all the way over to Tumbler Ridge. After all that happened, there was several different companies got involved, but I came into the area, and without the infrastructure, most of these assets wouldn't be of much value. Having the rail loop and everything else there, and the transportation route is what created this area, and most of the product that comes out of this goes from our area over to Prince Rupert and then into the markets in Asia. Most of the coal from this area, for probably the first 30 years, was sold in the Japanese market. There's a bunch of other stuff on that page which I'll skip because I think I've already covered some of it. This shows you, where on the left-hand side, from Prince Rupert across to China and into the Japanese market. We're about 2 days quicker than Vancouver, but we're more or less about the same as it is from Australia. So we're very competitive when it comes to that. The ones which we're probably not quite the same as Australia is India. The further out we go, obviously, it's more of a challenge. But when you're on a ship, another day or two to get somewhere isn't a huge amount of money. On the right-hand side there, we've broken it down to, Walter Energy buying out Western Coal for $3.3 billion. And kind of nice to be at the top of that list, to be honest. I'm not sure when you read down, there's other transactions that have taken place. The one underneath it, obviously, is also, me selling it to Anglo. But the ones I find a bit more interesting now are the most current ones, which are at the bottom. those transactions at the bottom, when you look what they actually paid in the ground, they paid over $3 a ton in the ground, and that's that's in the last year or so. So that's helpful for us because it gives us kind of a guideline of what these properties are worth inside the ground. Some of those ones at the bottom, unfortunately, have had environmental issues, which I'll try and cover as we go ahead. Now, I consider this page more important than it turns out a lot of other people I've talked to, but it's still, in my opinion, without the people with the skills to get this going in the right directions, we wouldn't be anywhere. John Perry is our Chief Operating Officer. John has been in charge of practically every drill program that's been done in this area, going back to basically the late 60s, early 70s. He worked for us on Western Canadian Coal. He ran the joint venture. He did the drill programs for Western Canadian Coal and NEMI. Before that, he did the drill programs for Denison. So practically every drill hole that's been done in Northeast Coal, John has been involved in either running the drill program or a higher up, basically looking after the head office in Vancouver. Just about the same time as COVID hit, I had a meeting with Mr. Bhattacharya. He came in, CIL and SAIL, which are the big Indian companies, had just come into Vancouver. He met with me. We realized in our past, with Western Canadian Coal and NEMI, we both sold coal to CIL, which is Coal of India Limited. Parth had represented CIL back in those days. He had a very strong regard for how we felt about our coal, and he felt that there was a great opportunity for us to do business in India. We spent a couple of days talking about what we needed to do, and at the end of it, I offered him a seat on the board, and he understands what his mandate is and what the company's mandate is, and and recently he's been a lot more active. COVID had a significant detriment to us. I'd like to say it didn't, but unfortunately it did. Ian Downing, who's directly underneath that, is a professional negotiator. He brings skills to the table that helps me. I can go back to Ian and discuss different thoughts on how to do things, and he frequently steers me back in the right direction. Tony Hammond and I have been friends now for a long, long time. He worked with me on building up Western Canadian Coal, and he was on the board of directors of NEMI. Tony has a history in the mining business. He brings the mining engineering aspect to the company, and I speak to Tony, well, practically every single day. In actual fact, I didn't today, which is unusual, but I was more worried about this call. Anyhow, Greg Waller. Greg did investor relations and corporate development with Tech. Greg is another one of these people who is very useful to me. I can go back and rely on his knowledge and his skills, and it enhances mine. I have a slight tendency to try and hire the best people because it picks up on the things I'm not good at. Steel making valuation in Western Canada. What we're doing there is we're showing roughly what they sold for and what they got for it. And, when you look at the Grassy Mountain and what we are and what their tonnage were, they got $3.78 a ton in the ground Australian. Now, that's a bit awkward because Australian dollars frequently is very close to ours, but I'm just going to average it down and say, let's say they got $3 a ton. So that's the comparison I want to carry through is basically looking at everybody that they've done. Grassy Mountain and Riversdale was $3. This just breaks down our tonnage on the Huguenot and the Flatbed. If you combine the two, you've got about 300 million on Flatbed and about 400 million on Huguenot, which is where we get the 700 million tons from. It's, I think we rounded it up a little bit, but two tons here or there really isn't going to make a lot of difference. When you open up these mines, frequently the figure that you start off with, it's actually going to be quite, a little bit bigger than that, because when you go in, you're looking at different costs when you start. By the time you're in the property, your cost comes down, and so you're able to recover coal that you thought was going to be too expensive is now actually in line. So anyhow, 700 million is roughly what we're using. Anyhow, these shows you roughly, and this is, I'm going to focus a bit more on this because I've had so many questions over the last while, and part of the reason why I'm doing this webcast or whatever they call it is try to explain to people what's actually going on, because people are taking what was a negative, which is the Glencore transaction on the Sekunka. Now, Sekunka is more or less, you know, when you look at the map here, you'll see that Sekunka is mentioned right at the very top in the name Glencore. Sekunka is a property that, you know, they applied for their permits. It's considered, you know, they have a lot of environmental issues to do with caribou. This is about the third time they filed the application. They didn't really change much on the application from the first times they filed. And yes, and they got rejected. That rejected caused a lot of problems, especially for Colonial Coal, because an awful lot of people then jumped to the assumption that if Glencore couldn't get Sekunka permitted, then what was the ramification for us? So if you don't mind, I'm going to step you through a little bit of this. As you come down on the left-hand side, you'll see the name Teck. Teck has just sold some of its assets to Conuma. They have the Windy and the Window Pit, which is immediately to the left of our Flatbed property. Those properties are now permitted and have been permitted over the last while. And then you look down below that, you'll see, you know, Trend and Roman. Roman has also now been permitted. That's Anglo's assets. And then there's the Herman, there's another deposit. But what I'm trying to point out here is, yes, Sekunka didn't get permitted, but the other properties in our area have been permitted, and some of them are going through the application process right now. So because Sekunka didn't get permitted doesn't mean that we're not. Now, the Flatbed property doesn't really have a caribou issue because caribou, as far as we know, haven't taken up underground mining, and this is an underground mine. The Huguenot property, which is further south, the area that people worry about in the Flatbed area and all the way up to Sekunka, that herd is called the Quintette herd. The Quintette herd does not go down as far south as the Huguenot. So the Huguenot, we have to deal with caribou habitat, we have to deal with all the other things in regards to permitting, but that is not a major problem for the Huguenot property. Anyhow, you'll see on the screen there, you know, the different things that are going on, the potential tonnage. By far the biggest assets in the area is us. Now, Anglo supposedly has got their assets up for sale. And so there is a potential that there might be a news release coming out. You know, it could be today, or it could be 2 weeks from now, or it could be a month from now. But potentially there's going to be some more transactions taking place in this area. I find any transaction that takes place in this area is a positive for us. It shows that there is an interest in this area, and anybody who's coming in now is planning on spending some serious money to take some of these into production. Some of these things have already been contracted out to go to production. So it is a positive thing for us. This is basically infrastructure. Flatbed doesn't have a problem with infrastructure whatsoever. You know, the loadout road that comes off Roman Trend and the extension actually goes right across the top end of Flatbed. Flatbed is one of those properties where, you know, with Roman Trend, we built our own rail, we put our own loadout in, and we brought stuff down. This particular one, you know, you could quite easily just truck it up to the PRC loadout, and it would be relatively inexpensive for the infrastructure. Huguenot is different. It's about 65 kilometers south. There is a heritage highway that goes down. You could use the heritage highway to truck it. We had a committee set up just to study transportation and different alternatives. There is quite a few different alternatives, but it really comes down to what size is going to come out of that property. If you do 1 million tons per annum, then using local roads is quite feasible. But if you get to 4 million tons per annum, then you better start looking at different alternatives. So we did, and we came up with different ways of doing it. A lot of the stuff we're looking at, there's other players in the area that are going to be doing different things. So some of that will actually, if they do what they think they're going to do, will actually save us money. There has been a feasibility study done by CN Rail to bring the rail down to Belcourt, which is just above our property. Obviously it's ideal for us to bring our own railway down, but those are all things for the people who buy the property off us. It's not something which we spend too much time. We've done what we needed to do. This gives you roughly the drill program that we did identified more tonnage, obviously, than when we first started. I think when we first looked at this property and when we first acquired it, there was probably about 100 or 125 million tons on it. We spent about 16 million on it. We did pick up additional licenses. We looked at where we needed to put the plant site and all the rest of it. This is a world-class piece of property. 400 million tons is a significant amount, and there's potentially more. When you start doing the underground mining, there's potentially that there's an awful lot more upside on that as well. We've done PEAs on these properties, and PEAs give us different valuations. On this particular one, if you take a 7.5% discount and you take coal prices at $174 US a ton, we get somewhere around $1 billion. And if you do it in Canadian, it's 1.3 billion. If we lease the equipment, the figure's more or less the same. The problem is that not problem, it's the solution is your CapEx comes down because you don't have to buy that equipment. It's more than likely than if you're going to open up a mine, and people that are looking at opening up mines up there, but the leasing equipment is the option that they go to. This is all it's accurate, but a little bit on the boring side. The problem you have is when you open up a mine, whatever figure you start off with, and if you start off at $175 a ton, those figures that's roughly where you'd be at. But coal pricing is not that, and as soon as you open up, your actual cost per ton come down because your initial cost is your greatest cost. After you're in mining, all of a sudden, what used to be $130 a ton drops that to 120. And so all of a sudden your recovery is better and your cost is better. So these are all figures that, they're fine to study, but in reality, most of them are going to be cheaper than this. Now, coal quality to most people is kind of boring, but it's not when you look at long-term benefits. We don't want to be burning too much dirty coal. It's not good for anybody. Our coal quality in Northeast Coal and the Huguenot and Flatbed is some of the world's best coal. And if you look at all the treaties that have been signed, whether it be the Kyoto Treaty or that last one they had in Edinburgh, each time we sign treaties, we take more and more dirty products off the market. When the Kyoto Treaty was signed, mines in Poland and Germany, which was basically brown coal, they got taken off the market immediately. Now, they were thermal coals, but when you come to the end of our coal, which, if they're going to stop coal being burnt, some of the stuff that the very end will be us. Pete Downs coal is probably the best coal in the world outside of Australia. Well, it's from Australia. And I do this mentally. I think of coal like a stack of sugar cubes. If you put the sugar cube on the top of the pyramid, that's Pete Downs coal. The next one underneath that, that's us. So by the time they get to us, it's going to be 25 to 30 years out. And by the time we 20 to 30 years out, it's a bit things like what they did in California when they put catalytic converters on cars. They'll be doing the same thing with steel mills. So, things progress, things are getting better in regards to how much contamination are coming out of the stacks. And so, if you start off with a really good product, you'll be still selling when everybody else drops off the table. Anyhow, that all that covers is our coal quality, and what we're really showing is that we're some of the best out there. This is the Flatbed property. And this is obviously a bit easier to see where the Roman property and the Trent property is at the bottom. They were the ones that were in Nemi. And then you go up to the Windy, which is right beside us. Those are the ones that have just been sold to Conuma. Tech sold that. And then you look at where the Quintette loadout and plant is. And then further up, you'll see the CN rail line coming down. The green loop is the loop that we built with Nemi. infrastructure, like I said, is within a kilometre, 2 kilometres. It's not much of an issue. There's a little bit at the bottom there. It says 1.5 royalty FOB. I'll cover that because I think I need to. That royalty is actually held by myself as the largest portion, but it is shared with most of the people who work for me have a portion of it, of the royalty as well. This is an NPV. It's basically the same thing. If you take it, you add the two together. We're using $160 a ton on this one. It is an underground. I still think long-term pricing is now coming in at $225 US a ton. So our valuations are, and let's say conservative to be polite. They're really underestimating what these are all worth. Like I said at the very beginning, coal is a bulk product. If you don't have the port, you don't have the rail. Having the coal is the major part, obviously, when you start. But if you don't have the infrastructure to get it to the port, it makes it very difficult. The picture on the right there shows you, where the coal seam goes, and it basically it starts in Northeast Coal where our properties are, and then it goes along mostly through parts, and then comes back out again in Southeast, which is where Elk Valley Coal, and that's where the tech assets are. Most of our coal goes through Prince Rupert, and most of the coal in the south goes through Neptune and West Shore. In the bottom left-hand corner, it shows you all the different players that are in the area, and quite a few of those people we're in discussions with. And that's the end of the presentation. If you want to get hold of Shane, I'd strongly recommend you use his email or you text him. Seems to be the way of the future. I have to do it, so good luck to you guys.
That's great. Thank you. Thank you, David. Magda, did you want to start with some of the Q&A?
Sure. So thank you for going through that. So just kind of to step back a little bit, can you walk us through a little bit through the market dynamics of coking coal and how it's different from thermal coal?
Coking coal is used in the process of manufacturing steel. And there's a limited amount of coking coal. I call it coking coal because coal is coal, but not all coal cokes. And you need coke to go into a steel mill. Thermal coal, on the other hand, is for boiling water, and out of that water, it turns a turbine and we create electricity. We burn an incredible amount of thermal coal. And because I think the last I heard, it's still 55% of the world's energy is created, electrical energy is created by coal. We can eliminate an awful lot of thermal coal. Natural gas will boil water, but at the moment, there hasn't been a substitution for coking coal in the furnaces. Most of the furnaces that are being built right now in China, Japan, Korea, and India, and Indonesia, and a few other places, are all designed to burn coal. And they don't build furnaces to last 1 year or 2 years, they build them to last 20 years. Some of the furnaces in India have been around for 100 years. And when you go to India, it's like going back to an old Indiana Jones movie. It's kind of strange. And then you go to the new mills in China, it's like you walked into a surgical clinic. It's immaculate, and it's hard to imagine the differences in style. But in China, they're spending a huge amount on technology so that their product coming out of the stack, basically the smoke, is as clean as they can get it. That technology is being expanded in Japan, Korea, and in China. India's kind of a bit slower, but everybody's going to have to convert. So the answer is one's for boiling water, one's for making steel. We're in the steel business.
And then are you able to answer how coking coal is priced currently versus what's the historical price range for the commodity?
I'll answer it, but unfortunately, I don't look at it very often, but the last I looked, coking coal is somewhere around $300 to $325 US a ton. A lot of pricing is actually done out of Australia because they're the biggest producer, And I think I looked and it was somewhere around $360 odd a ton. And thermal coal, if you generally, as a rule, not necessarily completely accurate, but if as a rule, if you take coking coal and then half it, that's roughly what thermal coal will be. Now, the problem with that is when you half it, and let's say it was 300, you'd be down to 150. At $150 a ton, that creates electrical costs in North America at a very high price. So, you know, the thermal coal has more of an effect on most people than coking coal price does. But coking coal prices have an effect on the price of making steel and on rebar and girders and all the other things. So when this all gets pushed through, and coking coal prices now have been high for a couple of years, long-term pricing, we in our own PEA, we use about 175. Long-term pricing now seems to be coming in, even countries like India, who tend to lowball figures, they're now saying around $225 US long-term pricing. China is saying the same thing. If that's the long-term pricing, that's very good for us.
And then how has the war in the Ukraine affected the global coking coal supply?
The area in Ukraine that carries the most influence on coal is actually called the Donbass area. So if you're looking at the world map, the right-hand side of Ukraine is the Donbass area. That is where Russia gets an awful lot of its metallurgical coal. India gets the metallurgical coal from there, and so does China. So when the war started, which is roughly a year ago, that compounded issues that Australia was having with China, and it pushed the price up. It's still, into some ways, it's still having that effect because there's no real way of building up that supply out of the Ukraine and bringing it down through the Crimea and into the Black Sea. So that's still causing some, rollover effect worldwide. It helps all coal companies because it keeps the price up.
And then we did quite a few questions about permitting. So mine was going to be, has the permitting process started for the two assets?
Permit is not something which we generally do. We do everything leading up to a permit. There's things that you have to have in place before you file a permit. And I'm trying to think of a way to describe it that makes sense to shareholders, but it isn't our job to take it up to permit. It is our job to make sure that everything needed to permit, like for instance, the environmental studies that you need to have, all of that is in place, and it has to be current, and it has to cover the things that the permit needs. You need to know what the water, if you have creeks or rivers or anything else, you need to do, you need to go and check your water specs. If you have snow, you need to see what happens when the snow runs through your property. There's all kinds of things that are covered under the environmental, and they are some of the most important things. Like for instance, we talked about earlier what happened with Sakanka. We have to monitor what happens with the caribou. So we have to pay, and we did. We paid for the caribou to be tagged, and then we monitor where the caribou go, and then it determines what the effect is going to be on our permitting. Like for instance, I said earlier that caribou are not an issue on Huguenot because it's a different herd. Flatbed, there is an area on the bottom end of the flatbed that they walk across. It's kind of like a marshy area. And we decided to negotiate with the government, and we gave back those licenses. It was easier to find the solution at the beginning than it was trying to work our way at the end. Those are the kind of things we do. Without that, you can't actually file a permit. You need 2 years of historical data before you even file. So we have to make sure that we keep all that ready. Then when you purchase the property off us, you will then determine whether you want to build a 1 million ton mine, a 2 million ton, or a 4 million ton. And ours, the Huguenot property is capable of being 2 mines at the same time. We could have an underground and an open pit. All of those will determine how you file your permit. So for us to file a permit for 1 million tons would be a total waste of time, and we don't know what you're going to do when you buy it. Some of the Chinese groups, for instance, aren't in a rush to permit it at all. They're quite willing to buy a property and leave it for 4 years because they believe the value of the coal in the ground is going to be substantially higher 4 years from now, where it could be $500 to $600 a ton. So they're not in a major rush to take it out of the ground. They're using it in a sense like a warehouse. Others, they're different. And that includes Chinese groups. We've got some Chinese groups who want to try and get it going immediately. We've got other Chinese groups are quite happy to look at it and say, yeah, if we do this, we'll leave it on the ground. Either way, we still got work to do.
And then possibly one follow-up question on permitting. So Colonial Coal in December of 2022 said that its projects will not be affected by the CCARF decision. Can you explain, how the company arrived at this assessment and if it's still valid?
What happened with CCARF is unfortunate for Glencore, that the Caribou decided, for one reason or another, that they liked that particular property, and the herd basically spends its time on there. They do move around, but when they filed their application, they filed it for an open pit, and there was issues that they had previously twice before, and those issues don't affect us because we already know that Flatbed is an underground, and we already know what the situation is on Huguenot. So what happened to them doesn't really mean much to us.
Well, what's the current national government stance on coal development? We'll keep it simple.
Well, if you want to take what happened in southwest Alberta, which is the Grassy Mountain property, they turned down the application. That had a rollover effect on us as well. But that's on the Alberta side, and there was other political things that led up to that. Our area isn't affected by that because, like I pointed out in the presentation, and I'll mention it again, other assets in our area are being permitted as we speak. The government has been encouraging people, and the letter they sent out when they rejected CCARF, they pointed out that the government is not against coal mining. It was against that particular property for the reasons that they specified. Other companies, like for instance, Conuma just bought the assets of Teck in the area. The transactions are going through because everybody in the business knows that that isn't going to have much effect on us.
Yeah, and David, can you comment on the recent Teck announcement, what this means for coal, what it means for M&A?
I find the transaction confusing, and I have a terrible way of expressing things at time, and I'm trying not to swear this time. I got criticized for swearing. That particular transaction I find annoying because it's a bit like taking a dollar bill out of your right pocket and put it in your left and say you sold it. I don't see anything changing. I'm going, Elk Valley Coal, or whatever they call themselves now, 90% of their revenue is going to go right back to Teck. So, but it does help in a way, because if the new group who take over have to be more progressive than the previous group, which was basically they did nothing. So if you in our area, especially, if you're doing nothing, anything is an improvement. And they've already done some things to help improve things, like for Sun and Windy and Window to Conuma. That transaction was about, again, $3 a ton in the ground. And it's going to progressively push more people to do M&A transactions, and it's drawn more attention to the coal business in British Columbia. All of that helps us.
There's a couple more audience questions. One actually relates to us, David. So how does management plan on closing the gap between the asset value and share price, given an acquirer will pay several % premium to acquire an asset? Maybe you can give a little bit of context as to why you decided to increase your IR.
What I'm trying to do here is, when you look at Western Canadian Coal and NEMI, one of the things I think we were delinquent at, or negligent at, and I'm trying to find the right word, is we didn't go out and try to explain what was happening at the time. Now, we didn't realize how quickly the time was going to change. Like, for instance, it happened so quick, and it happened so quick with both companies. This time around, I can see the pressure is building. And at some stage or other, it could be tomorrow, it could be a week from now, or it could be a month from now. But what's beginning to happen, and it's already happened in the area with the CCARF thing was bad news, but now the good news doesn't seem to make it out there at all. So what I'm trying to do is carry the message and try and let shareholders know it, that things are now beginning to brew where, when Teck sold the assets to Conuma, and now other people there's a bidding process that's going to start or has started on the Anglo assets. If the Anglo asset sells to anybody who comes in, has got to be more progressive, and if they're buying it, it's because they see more value in it. And then when you look at the assets that are up for sale, they surround us. Now, in fact, one of the biggest assets which is in Anglo, which is the Belcourt asset, it has significantly more value if they do a deal with us. It has significantly more value if they buy us. And we are further ahead on that property than they are. So we have some distinct advantages. If you wanted to look at putting big production in, we're way ahead of where Anglo is. We're way ahead of where Conuma and Teck were. So, but that's what my job has been, is to push our projects forward.
I think that's a sufficient answer. So what are the next significant catalysts and de-risking events for the company investors could expect during 2023?
I think the announcement that could come out from Teck could be another catalyst. There is other things that are happening which I just can't share with you. And some of this might be released by other groups, and will be, there's a kind of a rollover effect that will affect us. It's possible it will be directly affecting us, and then we'll have to do a kind of a joint news release. But there's potentially a lot of things that could happen. I just can't give you any more detail on it.
So at a corporate level, there was a question about who are your major shareholders?
Russell Asset Management is pretty close to 20%. The Emery Group is pretty close to 20%. Bunton and Co. out of London is 10 or 12%. There's a few other entities which I'm not sure whether they still have their stock today or not. But when you add the insider group and we're about 70%, including the insider group, which is me and John and the staff, so total about 70%.
And then a potential follow-on question was, how much cash do you currently have, and what is the plan for this cash?
We have about 7 months, 8 months burn rate. We're going to do exactly the same thing as we always do. We have to maintain the environmental studies. We have to maintain our licenses. The most important thing is our licenses, because that's what our assets are, as the coal licenses themselves. We do have other ways of if we, I hate bringing up money, but if we need money, we've been assured by our major investors that they will step up. There is no corporate change. The only thing which I have done is we did bring in somebody because our coal quality analysis was faulty. It turns out it was faulty in Canada. It wasn't just us. And it turns out we have a lot better coal quality than we thought we did. And we brought somebody in regards to coal quality. She also happens to be Chinese, which also helps me when we're in discussion with Chinese groups.
We had another audience question for you, David. If an adequate bid doesn't come in, what would be your plan B?
Well, I'd probably, adequate bid would probably come through the bankers at the same time. And then we'd probably do what we did with Western Canadian Coal. We would open up a bid process. It's a bit like going to an auction. We create a certain time and a date for everybody to have their proposals and bids in, and that's what we would do. But that would be in cooperation with our bankers.
What is the chance that the Canadian government would veto a Chinese bid? Is that something that concerns you?
It concerns me because of, quite frankly, what happened down in Alberta, Southwest Alberta. There seemed to be more political interference on that than I would like. We've been assured by our own provincial government that is not the way they're going. It's not. There was a lot of politics in regards to what happened down there. We don't have that same political interference in our area. Matter of fact, the MLAs and the MPs that look after our area all the way out to the port are in favour of coal companies. So we get a lot of political support, not negative. But federally, they really aren't going to have that much interest in, well, they won't have much influence on us. Ours is going to be more determined by First Nations and local politics rather than federal. They do have a say, but it's very much influenced by what the province wants and what the First Nations want.
What type of deal would you like to see? Like, what do you think is reasonable and executable?
What I want to see is a value of, very similar to what we did with NEMI. I don't want to use Western Canadian Coal, because Western Canadian Coal, we got $3.3 billion, and I like the money. I'm not knocking the money, but it's very hard to look for that transaction to be replicated because it bankrupted the company that did it. Anglo came in, and Anglo was by far more established, and what they came up with, so much a ton in the ground. And I've said it a couple of times during this presentation that if you look at recent transactions, including the Teck Conuma deal, per ton that worked out to $3 a ton. The Grassy Mountain and the Riversdale deal, they also come out at $3 a ton. If we get $3 a ton on 700 million tons, I'll be happy. I'll be really happy. But that's a figure I'm hoping for. Expectations wise, I also look at it and go, is 1% of selling price long term, which is $2.25 US, is that achievable? And it's not far from $3 Canadian. So we're back to more or less the same figure.
What do you think the potential acquirers' biggest fears are? What's holding them back from putting in a bid, given the global fundamental demand for coal is extremely strong right now?
Some of the things you brought up are the things that they've been concerned about, like Sekunka. They don't necessarily understand what a caribou is. In some countries it's called elk. In our own area, caribou are also called wapiti. So it can be a bit confusing to people. And then yes, if you're going to be spending $1.4 billion or $2.2 billion, you're going to want the clarification of what that really means. You don't want to be buying a property and it turns out you've just adopted a herd of caribou. That's not what you're in the business of. So yeah, those hurdles come up, and then we've got to go through it. And it's not something somebody's going to idly just take an answer and believe you. You're going to have to step in through the government and step in through First Nations, and yeah, that can take time. It's not like you can phone up the government and say, oh, we've got a bunch of Indian companies who'd like to drop in and talk to you about caribou. You're going to have to find time and work your way through it. Yeah, it causes problems, but the problems really with us don't really exist, and we're able to tick those boxes.
And then just maybe you can comment a little bit about how your relationships are with First Nation groups in the area and kind of what work you're doing on that front a little bit.
Sounds a bit like bragging. I've been very lucky. I treated the First Nations very well when we first started Western Canadian Coal. I offered them things which went against the Coal Association. I was criticized quite heavily by doing things which I thought was a way of being respectful, and I think that respect kind of worked out in the long run. They've treated me respectfully ever since, and I treat them. I think calling it Colonial Coal should have been good. I should have had some better thought on that, but I screwed up, and they seem to have forgiven me. I speak to First Nations more or less on a daily basis, and I try to keep them apprised of what I'm doing and inclusive of what I'm doing.
Going back, talking about your resource base and past transaction multiples, like what do you think is a reasonable price for what you have?
Probably 1% of the selling price, which is at the moment is over $300 a ton. So if you take 1% of that, it's obviously marketable because they're making a lot of money at the moment. If you were producing coal in our area, you're probably going to make over $200 a ton profit. So can you afford to pay that? Yes, you can. Now, is that going to happen? Well, that's why I try and get people to look at the PEA and look at the pricing that we had in the PEA. And we used 175 because I think somewhere in the whole mix of all this thing if you're going to spend that kind of money coming in, we better leave a little bit on the table to cover your risk. And we've done that on the Flatbed property because we've only drilled 20% of it. So there's significant enough blue sky on Flatbed. On Huguenot, we've done a bit more on that. So we didn't leave enough. We didn't leave a significant amount of blue sky. There's still more underground potential. But yeah, I'd like $3 a ton. But if somebody puts a bid on the table that's less than that and starts the process, obviously we'll open it up.
And that's in the range where you've seen previous transactions of late.
Yeah, they're $3 a ton, which I'm pleased about. I'm pleased that $3 a ton figures out there, but it also you've got to compare apples and apples. We compare very well because our coal quality is really at the top end of the range.
Okay. Is there anything that you wanted to discuss today that we didn't get a chance to talk about?
No, the thing which I'm trying to get the message across is the stock price is not indicative of what the value is. And when the stock went all the way down to around $1 after the Seconca news, that's when we started looking at how do I get the story out, because the existing shareholders, and I'm thankful to all shareholders, but especially the long-term shareholders, they needed for me to do this, and so I engage with you guys. You've got a good reputation, and let's get the story spread out. And people want to phone me. You've been arranging one-on-ones, and I'm more than willing to do the one-on-ones, and then try and share the best I can.
You would attribute the recent share price action to just more meetings, meeting with new investors, etc.?
To a certain extent, yes, but there's always other things going on. Like, for instance, the Tex transaction. If you're in the market and you start seeing M&A in the coal business, people who I haven't spoken to, say people who had actually made money on Western Canadian coal and NEMI, who I haven't spoken to in 10 years, in the last couple of weeks have been buying stock. And I'm finding that kind of weird because and the guy phones me up and he says, "You remember me?" And I went, "Yeah, funny enough, I did, because I'm not really good at memorizing people." But I remember him, and I said, "Yeah." He said, "Well, I did this, this, and this." And I went, "Yeah, I remember that." And he said, "Well," "we're now looking at getting back into the coal, and we just picked up we're picking up stock." And so I think, without a doubt, the combination of what you're doing and then other things that are happening outside is basically, I'm going to give you more credit than me, put it that way.
Well, I appreciate that, but I think you tell the story really well, and it's such a compelling value opportunity. We have a ton of questions left, David, so maybe we can follow up with some of these offline, but there's one individual that really wanted his question asked.
Well, go ahead. What time have we got left?
We're coming up on the hour. If you want to run over, we can get through.
I don't care. Like, I'd like to get this over and done with. It's like going to the dentist. There's no point in fixing one tooth when I need two. Just do it.
Okay, well, I'll try not to take offense to that, David. Okay, so will you entertain a bid which involves an upfront payment followed by other payments which are contingent upon permitting milestones?
The answer is probably yes, because that could be a good starting bid. I'm not saying that would win, but if somebody puts a proposal on the table that I think is advantageous to shareholders, the answer to that is yes. I've been asked, would we sell one property and not both at the same time? The answer to that is yes as well. Whatever is best to make shareholder money, and I'm going to look at. And if it's a proposition that goes on the table, it allows other people to go over the top of it. So I would consider that.
Okay, and as a follow-up comment, that particular individual said that he believes many shareholders would like a deal whereby they receive a guaranteed upfront payment followed by other payments which are milestone based.
Good luck on that, because I'm not negotiating that. But if it comes through, I'll bear that in mind. Most of the people we're talking to, let's say the whole company is up for sale. There is occasional discussions between a couple of groups where one is interested in underground mining and the other is interested in open pit. Now, obviously, Huguenot has the potential for both. Flatbed is strictly underground. So it is possible that somebody will make an offer for Flatbed or the other way around, offer Huguenot. We will consider that for the right price, obviously.
Okay, that was another question. If you're able to answer, how many potential buyers do you have engaged, either formally or informally? I'm sure you cannot answer that, but
We've got about 15 groups right at the moment that we're dealing with that have signed confidential agreements. Some of them we've got to be very careful of because they're publicly traded companies. And so anything which we do, which could be negative or positive for their stock, we've got to be very careful. So it kind of limits me what I can talk about.
okay. And presumably some of the prospective bidders for your projects have been at the table for 2 to 3 years. I understand that giant companies take a long time to act, and I get that COVID greatly slowed things, but how should listeners think about the rest of 2023?
Well, so some of that's exactly accurate, but we did have some of the major steel companies at the table just before COVID hit. Unfortunately, one of them was from Wuhan, which is where COVID came from. Yes, and really, everything kind of locked down until last October, when the Canadian government changed the regulations. And then a lot of the groups that have been talking to us one way or another decided that they were going to come in, and a lot of them came in a hurry. The last group we had came in just after Christmas. Well, they were here during Christmas and after Christmas. Now, because of, we're in heavy snow now, we don't want to do site visits, and we haven't actually had anybody require a site visit now. Practically everybody who needed to be on site has been on site. So now we've got to get down to what kind of arrangement do you want to come up with?
And are there any new NDAs?
Yes.
Earlier, you mentioned that if a bid isn't where you want, you could start a bank run process. Why not start a process first?
Well, I take advice from my bankers, and they don't think it's a good idea. And if they don't think it's a good idea, what's the point of having bankers? I mean, it's like having a lawyer. If you don't take his advice, get rid of the lawyer.
And what type of updates can we expect on environmental impact assessments?
Well, the biggest issue that we have to deal with, unfortunately for us, because of what's taking place in our area, selenium is an issue in Southeast British Columbia. We don't have selenium as an issue in our area, but now because other companies are progressing in Northeast BC, we can actually watch what they're doing. Now on Western Canadian Coal and NEMI, we did put selenium treatment systems in. They weren't expensive. They were $4 to $5 million, and it seemed to do the trick. But the requirements as you go forwards, the government is moving up the standards they want everybody to achieve. And that's part of our job, is to make sure that we keep doing our environmental studies and meet the new objectives of the government. But it's a process, Deborah. There's no particular quick answer.
And where else can you go in the world to tell the Colonial story? This is a great story, and it seems to be underreported.
Well, here's the challenge. I just got invited to come and speak. There's a conference in India that they want me to go to. I'm going to give it some thought. I've got other things I have to do more or less immediately, which require me staying in British Columbia. And then there's other things, like there is some Australian companies. Australia is a lot more progressive in the coal business because they make a lot of money out of coal. So, Queensland, New South Wales, that's probably the biggest source of revenue out in that part of Australia is coal. So they have some interest as well. So we have to see. The head office for some of the people we're talking to is actually in Australia.
And are there any US companies at the table? Have any signed an NDA?
I'm sorry, say that again, please, Deborah.
Oh, sorry. Are there any US companies at the table, and have any signed an NDA?
Yes, there has been a couple, and they both have, yes.
Okay. And I think that's about it for questions. Magda, did you have any additional ones?
No, I think that's it. Thank you.
Well,
So
good.
Dave, just to leave it off, maybe you can give us like 3 to 5 points that you really want to get across to investors.
Yeah, well, the most important is news from other companies in regards to permitting issues, whether it be in Alberta or Southeast BC. I don't think we're going to get any more bad news in area. I can't think of all the people that I know have filed their applications for permits in our area are all actually at the final steps or have been approved. Secunca was a bad one. The problem is that it had the rollover effect of causing us a lot of problems, and so yeah, those issues are in our area, I think, have gone. Other point, the share value, the price per ton, there really isn't much of a correlation between one and the other. And that might be the case right up to the point we get bought out. And the buyout price will probably have a lot more to do with the resources and how much is done in the ground than it will do share price. Occasionally comes up. We do have a couple of Indian companies who have the audacity to say, well, we'll buy all the stock. And I'm going, good luck, go in the market and buy it. I'm not going to stop you buying it, But then one of their bankers told me, well, you can't really do that. So yeah, that doesn't work, but I'll give it a try. Anyway, that's about it.
We'll see if we can help you close that valuation gap.
Okay. Okay, well, I'm either blushing or the light's gone in my room. So,
Well, I think we've tortured you enough for one day, David.
I thought that as well. You say that. Yeah, exactly how I feel. Yeah,
well,
okay.
If anyone had any additional questions or wanted to book a one-on-one call with David,
Yeah, that's fine. If you want to arrange that, I'm fine with that. As many as you like, as long as you like. Okay.
David always makes himself available. So yeah, feel free to reach out and we'll try and get everything answered. And thank you everyone for participating in the session. And thank you so much, David. Despite the fact that you don't like these things, you always do very well at them.
No, thank you. And yeah, okay. I'd like to say thank you to all the shareholders. Thanks for your patience. Unfortunately, it's been longer than anybody expected, but yeah, thank you very much. And if you do need to get a hold of me, I have an email on our website. You can email me, or you can email my son. I'd email me first if I was you. And yeah, that's about it. Okay.
And you got through with no swear words, none that I counted.
None?
I don't think so, Magda.
I could finish it off.
Didn't count any.
Okay. Goodbye.
Let's count that as a win. Thank you so much for your time.